Good evening. I'm Peter Reznicek from ShadowTrader.net, and this is the Weekend Edition. First things first, of course, you'll notice I am not at the usual studio, and this is because we are moving, something that we're super excited about. New studio, bigger, better lighting, coming at you very, very soon. We are super excited to bring you the Weekend Edition from the new studio. We hope to be recording there within a couple of weeks. But before we get into that, lots to talk about in this week's market, right? We had a huge gap down on Monday, precipitated by the DeepSeek news, which affected a lot of American AI companies, and that took the market lower. And this particular program is going to focus a lot on that gap, what happened after that, and more importantly, what could happen next week if some of those AI stocks move lower. I'm going to be doing a whole section in this week's program just about those AI names, looking at those charts individually, and we'll see what kind of effect they might potentially have on next week's trade. All right, all that and a lot more in today's Weekend Edition. All right, let's get into it, starting off with the weekend review, talking about what the S&P, NASDAQ 100, Russell, etc., and key sectors in the S&P and some other stuff looked like over the course of the week. Remember, I do everything always from the open, not taking into consideration the gap. So some of this may seem off to you, but it's not to me, because I look at it as how much it rallied or declined from the Monday open, and that's very, very important. So you can see the S&P was about up 1 1/4, and the NASDAQ rallied 2 1/4. All of this happened after, of course, the big gap down on Monday. The Russell was relatively flat. As I've discussed before in this segment, you want to be looking at outliers as much as you can in the sectors to maybe give you an idea if a trade is developing. So if I was doing that, one of the first things I would be thinking is that energy has been down for a couple of weeks now, right? It's been kind of weak, and it was relatively weak this week, down almost 4%. So is there going to be a rotational trade back into energy developing at some point? Should be potentially something to watch. But overall, sectors were very mixed. As I mentioned, the market move was generally up from Monday's open because it was on that huge gap down, and then we rallied, but we didn't go too far after that. We're going to be discussing that in the next segment when we look at the charts. But at the end of the week, from Monday's open, technology up about 1%, financials 1.4%. XLY, this discretionary, continues to be really strong. We've talked about that in past shows. 2.5% on the upside, so big relative strength there. And communications continues to be strong as well, up about 3.5%. So this was actually the clear winner over the course of the week. Materials were about flat, real estate about flat, not too much going on in utilities. Bonds came down again. This is kind of noteworthy. Pay attention to where this 10-year is. It moved up a good clip this week, and of course the VIX moved down, which makes sense because again we're measuring from the Monday open. We'll see how that goes next week. If we get some price movement in the other direction, obviously we should see a pop in the VIX. And gold made a new all-time high. I'm actually not doing too much with it in this particular show, but it's something that we'll be revisiting. I actually talked about that recently, if you recall from last week's show. Gold was the chart in focus, and I was telling you that you should be buying on any pullbacks for the test of the all-time high. And that all-time high happened this week. It actually went even a little bit further and notched a new all-time high past that older level. So gold up about 2% from the Monday open. Oil, as we talked about, ties in with that XLE. Very, very weak. And Bitcoin was about flat. Not too much going on in Bitcoin this particular week. Okay, heading over to our What's Really Going On segment. This is, of course, where we talk about what's really going on. And that is, of course, what's happening in the charts, because that's all that matters. Starting off with the S&P daily, as we always do. And I'm seeing a channel here that is important, a channel high. And we'll see if that actually ends up being a high or not. What I'm going to do is I'm just going to draw a little trend line right here. And we're going to call this is going to be a channel high right here. Because remember, when you connect tops, that defines a channel. Trend line is more something that like connects bottoms, and usually with a channel then you can do what they call redraw as channel, and then you have the bottom of it, and then you know basically the prices are within that range. But we don't have that yet. Obviously these prices are a little bit far away from that. But my main takeaway here is this 8 EMA, because this here was the gap down on the DeepSeek news. We'll get into that a little bit more as the show progresses. And you can see that almost all of the bars over the course of the week interacted with that 8 EMA, right? Almost all of it interacted with the 8 EMA. And we didn't really get much further, right? It's not really that normal that you would spend a lot of time hanging around that 8 and not breaking through in one way or another. Like, look what happened here when you hung around the 8 for 5 sessions. The next move was pretty explosive. And here you also tested the 8 multiple times, and then you had a move like that. So here we're hanging around the 8, and the question is, are we going to get a move? And it looks like it should be down. Obviously, we're closing more at the bottom of the range now, but we shall see. And I think that what that's going to do is potentially put the 21 in play, which is also at this key 6,000 level. As we know, the market tends to like these big round numbers, and it may take longer for that to sort of resolve. So we'll see if we get down to that 6,000 next week on the breach of the 8 EMA, and also this more or less like a 4-day balance, which is also important. Remember that if we are to move below this area here, you're going to get a lot of overhead supply from all of these traders here. Now, if something more bearish is going to develop in the markets, meaning a bigger move to the downside, I would think it's going to develop below this low, because this was that gap down on Monday on that news. And obviously there's a lot of people who covered shorts, and probably some new money longs as well, who thought that those AI stocks were a bargain at those prices, and they got in at that low. So I think anything below that you want to be watching very, very closely next week. If there is some serious bearishness, that low is 5962.92, so call it 5963 in the S&P. That would probably spark a much larger move to the downside. All right, let's move over to the NDX. First thing you want to notice is that it doesn't have the up channel. This channel we can remove. It's not legit anymore. But it doesn't have the same up channel that I talked about there, because I can't take this high and connect it to a higher high. I'm actually having a downward channel now, because I'm connecting it to a lower high, right? So if we were going to make this into a channel, this would be more like this, and obviously not nearly as bullish as the S&P, but the same interaction happening with that 8 EMA over a number of sessions. So we'll see if that 8 EMA breaches and takes us a bit lower, and then of course you have the Monday low right around that 21,000. That's also at a very key psychological level. Just like that 6,000 is important in the S&P, the 21,000 is important in the NASDAQ 100. All right, let's move into our sector spotlight. And this week I decided to talk about XLK, which is of course the largest sector in the S&P. It is exactly 32.5%. I'm just looking over at my sector boxes there, 32.5% of the S&P. And it seems to be that as technology goes, the market goes, even though there is, or I should say are, pockets of relative strength in this market, like in financials, healthcare, et cetera. We'll look at that a little bit at the end of this segment. But for now, we're just going to stick to the XLK, and notice that it is actually well below the 8, and also in this circled area. I'll just change the circle right here. You have a pinch. You have a pinch to the downside. So you get the pinch to the downside here, and you move a bit lower, and then you get the pinch to the upside, and it goes up. Whenever that 8 pinches through the 21, you get a little bit of action in that direction. So we'll see if this time is the same, and we come to here, to these prior lows. Now these prior lows I think are going to be important, because they are a double bottom, pretty much at that 225 level. There were 2 lows there, and that of course means that that low is then weakened. And so if the technology sector ETF can get below that, well, then there could be some more lows to come, because we know that this reference has now been weakened. It is a double bottom, so keep that in mind. Within this sector, what's driving it is a lot of the names you know, which is like Apple, for instance. That had a very ugly day on Friday with a gap up on their earnings on Thursday night, and then a big move down, kind of a bearish engulfment of a couple of these bars, but not that many, but it took itself right down to the 8. And Microsoft is the second largest holding in this ETF, and that looks ugly to me. I think there's potential that it actually moves lower. We were short some puts in the name in the weekly options advisory, and we actually covered them for a tiny gain, or close to break even, because we were short puts at the 400. And my take on it was that I was telling my subscribers, I said, you know what? Let's just scratch this one, and we can revisit this at much better prices probably. If prices come down next week and we see Microsoft sub 410 here and moving towards that 400, well, then we can probably be selling some 385 puts that'll be rich and will be a lot safer than those 400. So we'll see. And obviously Microsoft is a somewhat rotational stock, as you can see here. So looking further out into the future, this is probably a pretty good buy point, right? Right around that 380 area. It's probably going to be very interesting. I think that buyers are going to get probably a little bit excited about that. All right, NVIDIA is also in here. That's the third largest. That feels like a rollover. They also, I should say, they gap down with all the DeepSeek news, and it's kind of forming this 4-day balance here. Remember, balance areas can lead to excess. Balance leads to excess. Excess leads to balance. And if we get a break from balance to the downside, remember that you should assume it's going to be the same amount of height as the balance. So that could take us basically down to this 100 level, and then the real support is down here, which is below 100. That's the last support where we came down before we made this higher high up in here. So something to consider, and they've got a little ways to go before they report, so it's going to kind of just trade on regular supply and demand, and that is the third largest portion of the XLK. And we also have Avgo within that sector, AVGO, Broadcom, looking okay. I mean, kind of in between the 8 and the 21, kind of a no man's land here, I think, because the stock was so strong off of its earnings report. And I like to kind of divide everything into thirds and see where we are. And look where you are. You're right in like the middle third here, and that's never a good spot for a trade, really. So I wouldn't be looking too much at this one. And last but not least, I'll just throw up Salesforce, because that's the 5th largest in here in this ETF, and that's looking pretty good. It's kind of right at the 8, and you had a pinch here. It's moving up, and also a very middling chart, I would say, where you are just kind of inside of the middle of the range. But just understand that as you move down the list, like for instance, this Salesforce that I'm showing you, that's only 3.5% of the XLK. And that's why those first 4 names are so much more important, because altogether, like Apple is 15, Microsoft is 13, right? So that's 28 right off the bat, right? And then you've got NVIDIA at 12, so now you're at 40. So between Apple, Microsoft, and NVIDIA, that's 40% of the XLK. So it's really all about those 3. That's why I wanted to look at these top names with you in the XLK and tell you what stocks you really should be looking at, because as Apple, Microsoft, and NVIDIA, and to a degree Broadcom, that's like 5.5%. But as those top 3 names are going to go next week, thus will go the XLK. And as the XLK goes, remember, almost a full third of the S&P. And that's why this is so important. And even when you get sector rotation, as we got this week, for instance, in healthcare, right? Like look at XLV here, right? It made a new swing high, and then it kind of sold off with the rest of the market. But it just goes to show you that even when there's rotation into some of these stronger sectors, look at financials, new high this week, and then only started selling off on Friday. Even when these sectors are strong and things rotate into them, it's not enough to hold up the market. The market tends to be very, very sensitive to how that XLK goes, and that really kind of drives the selling. So we'll see what happens next week, and we'll see if these relatively strong sectors can hold up or not, or if it's going to continue to be all about tech with some of those names that we just talked about potentially moving lower. Okay, on to our charts to watch, which is kind of continuing with this AI theme after what happened with the DeepSeek. NVIDIA is, of course, the first chart. I'm just going to run through about 8 or 10 names, and these are the ones that I think are really going to potentially drive the market next week, and they're all AI names, starting, of course, with NVIDIA. We already talked about it a moment ago when we were looking at the XLK. It does show signs of rolling over here, and again, if it does move below this low, then you have potential move, I think, to the 100 level. That would be kind of bearish. Overall, there's also this balance area here, as I said, and you want to pay attention to that. Let's look at some other names. ServiceNow is also an AI play, and you can see how it's pretty much very, very similar to the NVIDIA chart, although it didn't come down until it reported earnings, right? It didn't really have that much effect on the news at the early part of the week. That was here on the 27th, which was here, right? That was here on the 27th. So it did gap down a little bit and then rallied a bit. But then when they reported is when it really started to go down. This is an interesting name. I'd like to actually see if this can hold these levels and build out a base maybe longer. And then if the market is okay, then it could be a pretty strong move up. I'd like to play that at some point for the gap fill, but we'll see. But ServiceNow is also in that AI space. Another one is called SOUN, actually, SoundHound. You can see that's pretty weak here, just kind of going sideways, kind of a range of a bear flag. Let's look at Palantir, PLTR. Relatively strong, not really doing much of anything, but they are going to report earnings soon. That's going to be on February 3rd, but also one that I would consider to be MI, or rather AI. And then also we have some semiconductor names, right? We've got ASML, which is kind of relatively weak, not going anywhere, held up okay this week. I would say look at Meta, which reported earnings this week and is very, very strong. If that comes down, that will also have some effect on the XLK. They announced recently that they have a huge push into AI and they're spending a lot of money in that space. Taiwan Semiconductor, of course, another chip maker, gapped down and rallied, but could only get up to that 8 EMA, a little bit above, and it's now hanging out right at it. Let's look at Avgo, which is Broadcom, same kind of situation, big gap down and then rally up to this area, stuck between the 8 and the 21. And also ARM, which is also in the chip sector, looking all right, kind of middling. And last but not least, don't ever forget about Apple. I include them here. I wouldn't say this is like a pure AI play, but not all of this stuff really is a pure AI play, right? You're looking at names like Meta that do lots of different things, but they have big initiatives into artificial intelligence. And that's why I'm saying that if that narrative continues next week, some of those names could be hit, and all of these names that I'm telling you about, I feel have somewhat of an effect on the market. Certainly this one, because this is the largest piece of the S&P itself. And notice that the gap up on earnings here was pretty extreme, and it did nothing but sell off all day. And it went much, much lower here, taking it right back down to the 8. So I think some of these traders are definitely going to be somewhat disappointed, and there's potential maybe that we revisit this 220 area where we supported, about 10 sessions ago or whatever, right around that 220. So we shall see. All right. So these are names to watch. Obviously, it's not a complete list. There's tons more in the space, but I'm just trying to get everybody acclimated to the fact that I think this stuff definitely does matter. And it definitely had kind of a shock to the markets this week. And we're going to see if some of that selling continues next week and what effect it may have on the broad market. Okay, FedWatch this week was an FOMC meeting and they did nothing. And I thought the tone of Powell in the press conference was a little more hawkish. And he's kind of saying like certainly not in any hurry to cut. And now the market's not pricing in nearly the amount of cuts that they had before. And we know that rates are still holding up pretty firm. So I just wanted to take a brief look at this and what the CME FedWatch tool is telling us for the next meeting, just kind of looking ahead a little bit into the future. This is going to be happening on March 19th. And as we came into the meeting that just happened earlier this week, the odds of staying the same were up here. There was like 99.9%. There was like almost no odds of any sort of a cut. And it's still relatively early. And we've got like almost 6 full weeks before we get into this meeting. But as of now, notice that the odds of a cut are pretty low. It's less than 20%. So it's like less than 1 in 5. And you can see obviously that puts the odds of no cut at 82%. I like to look at this at least once a week because I do think it matters, right? Obviously the market is keying off this, and the more they keep pushing these rate cuts out into the future, I think the less the market kind of likes that. So pay attention to this FedWatch tool. It's why I definitely like to include it in the program around when we have an announcement, either before or after, and also give us a better idea of kind of how things are shaping up for the future and what the Fed might be doing. But right now is definitely leaning pretty heavily towards no cut in the March 19th meeting, and that means that we would stay at this current target rate of about 425 to 4.5. All right, on to a little bit of market profile. As you know, one of my favorite subjects to discuss. I'm not going to get too deep this week, but there are definitely a few things that I want to show you. Mainly, I want to kind of concentrate on where value is. Is the yellow boxes, and this is where 70% of the volume trades. And I think it's kind of noteworthy that value hasn't really moved up over the last 4 sessions. It's been pretty much the same, right? It's a lot of overlapping and unchanged value in the last 4 sessions. And why I think that's noteworthy is because it kind of speaks to the balance area, as we talked about. And a move below this area, like let's say we have a gap down on Sunday, right, somewhere in here. A lot of this is going to be overhead supply, right? We know that this is where everybody traded, kind of in between here and here, right? This is where all the traders traded with a little bit of action happening up here in this value area that extended. So we know that the value areas are there. We know where 70% of the volume traded. in those sessions. And obviously a move below those sessions, as I said, is going to be that overhead supply. A lot of those people are going to be looking to exit those futures positions that were accumulated up in this area. So I would really keep that in mind as far as where this value is developing in the profile. Beyond that, notice that Friday's session it is split into two distributions. So that's somewhat of poor structure in that most of the day on Friday was hanging out in this upper distribution up here. And then we had some news on Friday, which is that tariffs are going to be going into effect on February 1st, which there was news, I guess, related to that said that these tariffs were going to be pushed out to March. And then the White House came out and said, no, that's actually a lie. We're still on schedule. Those tariffs are happening on February 1st. And some of that is pretty high. I think as far as it connects with Mexico, it's like 25%. And I think Canada is involved, and obviously China. So market didn't like that at all for obvious reasons, because that means that inflation is going to be a little bit more persistent, and that of course means higher rates for longer, et cetera, all things that the market doesn't like. So beyond those single prints on Friday, one thing to note also, or I should say two things to note, a couple of things, is that you had a POC migration lower. So the POC did move down with price, and that's a little bit more bearish. If we close down here and we didn't see this volume POC. The volume POC is, of course, where the most volume in the entire session traded. I'll make it a little bit bigger just so you can see that number. See where the green letters are? Well, the green letters correspond to this 19,470. That's the number of futures contracts in the ES that changed hands at this exact price level. And this is more bearish than if this number was higher up in the range. We call that POC migration, because basically the POC migrated down. Obviously, over the course of the session, the POC was higher. At some point earlier in the session, the largest number of contracts traded was somewhere up here, right? Look at when you go up into this area, up near the top, there's your five-digit numbers, and you can see that's where all the volume was trading earlier in the session. There and also here, there's a pretty big number as well, 14,000 and a half contracts right there. But then because of the bearishness later in the session, you saw that the POC moved down. Again, we call that POC migration. And what it does is it basically confirms the move down a bit more. Had this larger volume not been committed at these lower prices, it would be less bearish. So something to keep in mind. Beyond that, note that Friday's low is actually kind of a weak low, and it's also a poor low. It's a poor low because it has no excess, so it needs to be repaired. So we already got the move away from that poor low. You can see move to here, and the settlement was here. That's usually caused by late day futures traders who are day time frame futures traders. If you ever notice a market that trends into the close, it's officially, or I should say, really relevant on a trending day. And this wasn't fully a trending day. This was kind of a two-sided day where you had trend up in the morning and then trend down in the afternoon. But we closed relatively low in the session, and usually whatever upward movement you have counter to that is due to futures day traders covering their positions late in the session because they cannot go out with any position. They have to be flat. That's kind of the rules for them. If they're, especially if they like trade at prop firms or whatever. And so they're covering. And what I thought was interesting about this close is that you saw that covering late day in that O period from the lows, but it didn't really bounce all that much. And if you saw my tweet on Twitter, the SPY, the futures close early on Fridays. They don't have the same 24-hour action. They close relatively, much earlier. There is no Friday night session. It's not going to open until Sunday night. But the SPY is already down $3 in the time that the futures closed here to 8 p.m. on Friday night when the SPY closed. It's already down $3. So there's probably a chance that futures are going to open up below this low, and all that value that we talked about up here is going to be overhead supply, right? So you've got a poor low and a weak low here, and we'll see how we open in relation to those lows. Looking forward, what can we look at as far as more lows? This low is also kind of poor-ish. We call that a lack of material excess. I believe that it needs to be repaired because it also lacks the excess on the bottom. So keep that in mind, that if you move aggressively towards that level, that also could be a short in the futures because it is, again, going to be repairing that action. And then in this 128 session here, This is a lot of single prints here, and I'm going to put that here. I'm going to call that top of the single prints, which is important. Single prints are always important, right? The extremes of the single prints, like right where the top is, that can often be supportive. And then if you get down into the prints, obviously it's going to be a lot less support because this is a very emotional area. And notice how the volume in this area was relatively low. So that's another area that could also be in play, maybe for a little bounce and then maybe even for a short down through it if we were to get that low. So just a little bit of market profile nuance for you there. Some things to think about for next week vis-a-vis the market profile. All right, last but not least, let's do our looking ahead section where we talk about what economic data and earnings might be coming down the pipe for next week. It is going to be hot and heavy just like it was this week. You can see that lots of big earnings names are happening. Let's start off with the news. However, remember, I only talk about the economic data that is of high impact. We got an ISM number starting off the week on Monday. That can have some impact. Then the services number is happening on Wednesday. And then Thursday and Friday is where some of the employment data starts to come in. And we know the market is very, very sensitive to that. There's also a Q4 productivity number on Thursday, in addition to the initial claims and continuing claims. And then on Friday is non-farm payrolls. We're going to get a new unemployment rate reading and also a consumer sentiment that usually comes out at 10 a.m. Eastern from the University of Michigan. As far as earnings are concerned, some more big stuff happening. Google, obviously, big potential to move the market. This is Snapchat, I think also has some potential. As with the earnings reports, remember, I only list those earnings that I think have potential to move the market and or a few names here and there that I think are like very tradable, right? Especially for like have some juicy options. Like I would put Lilly into that category. Definitely, since it is, kind of an expensive stock and a big mover, but they are reporting on Thursday along with Amazon. I think this one is going to be very, very important because it's going to tell us a lot about the nature of not only the American consumer, but I guess the consumer worldwide, right? In terms of true demand. ConocoPhillips in the energy space, we talked a bit about the weakness in the energy space at the beginning of the program. Remember, that sector has been kind of beleaguered lately, so we'll see how the ConocoPhillips earnings have any effect on that. Midweek is going to be Uber, Yum Brands, ARM, which is in the semiconductor space. That's important. That kind of goes hand in hand with the whole AI theme of this week and potentially next week. O'Reilly Auto Parts and Ford also reporting on Wednesday. Ford, I think, is one to watch because it's kind of hanging around that $10 support level. Check the chart when you get a moment. I think that it's almost always a buy whenever it moves below the $10 mark. That stock doesn't tend to spend too much time below 10 bucks. So if there is some sort of a gap down on earnings, taking you like, let's say, into the low nines or maybe even the high eights or whatever, you may want to consider that for a long swing. So just something to think about. But anyway, lots of stuff happening next week as far as economic data and some of these big name earnings. So definitely stay on your toes. And that's my show for this week. Thank you so much for spending a little bit of your weekend with me. Remember, if you could, please hit the like and subscribe buttons and also the bell icon so that you're notified whenever Shadow Trader posts new content to its channel. Recap a little bit of what we discussed. It's going to be all about that 8 EMA in the NASDAQ 100 and in the S&P. I think it's relatively rare that we ride that for so many days. And of course, those AI stocks are going to be very, very important. I want you to watch some of those charts that we discussed in the show, NVIDIA and others, because I do believe that if they make another leg lower, it's going to pull the XLK down, and of course that's 1/3 of the S&P. And even with some of that relative strength, rotational trade going into places like healthcare and financials is probably going to move a bit lower because that XLK, of course, is the largest sector, and it seems like in the market technology is king, and the broad market tends to follow. All right, I'll be back next week. In the meantime, be safe out there. Coming at you from beautiful Los Angeles, California. As always, I wish you good trading and good night.